Hey everyone, Jack from Trading Matrix here. Hope you are well. As ever, this is our trade talk for the 13th of July. We are revisiting two trades for which I made videos on a part one basis today in the crude and the Nikkei. To cut a long story short, we got stopped out in the Nikkei and took a partial half-hour exit on the crude. Rather than make two separate videos, I feel like there will be more interesting themes to talk about in the coming days. Condense them down into the same video just for the sake of completeness and to bring you the second parts on these trades like I said I would. The crude is the chart I've got up here. We entered this via a calendar spread. If you haven't seen part one, please do go back and watch that so you get a fuller picture of why we entered it. Nevertheless, we got a close out above the Bollinger Band we were looking at after a significant volatility contraction. Having anticipated a sell-off, we in fact got a rally, a close out above it on Tuesday, and so crystallized the position for a half-hour loss like I mentioned. Let me just bring up the Nikkei as well. Okay, so I've still got the diagram on the charts. This is when we entered on Monday. We did in fact widen our stop just to below 31,900 on going into the close on Tuesday. Tuesday went sideways and we felt like we wanted to give the market just a little bit more room to breathe, or the position a little bit more room to breathe, I should say, just because of the way the momentum structure and our proprietary bands were lining up. And indeed, we duly got stopped out, sold quite close to the lows, within 50 Nikkei points. And then, always frustrating to see this happen. You get wicked out and re-rally. I mean, if you're a regular watcher of our channel, and shout out to all the regular watchers, you will have seen us, or indeed, even if you haven't been watching us too regularly, but you're a long-time trader, you will have experienced this, I'm sure, where you do just get wicked out or close to being wicked out, and then the market takes off without you, and you're left with nothing on. It does happen. This is a scenario where, had we had access to a deeper options market, or in fact an options market at all on the CME for Nikkei, we most likely would have sold a downside put spread, just like we did in the ES in the trade talk I profiled very, very recently. I believe it was yesterday. But no such availability, so that's why we took the position in the underlying. So closing loop on both of those. Thanks very much for watching. Like I said, I do feel that given the strength of the moves and the dollar weakness, index rallying, crude rallying, we will have more interesting things to talk about in the coming days and week ahead. Thanks for watching. Cheerio.